Good morning, good afternoon, good evening. You're watching me, Nikki, you also known as Facelesstrader, here on your awesome 10x channel. This is today's global market updates, June 11, 2020. News you can use for your trades. So I think this is an article that you want to read about programmatic TV advertising. So as of May 2020, we already have the results that programmatic ad spend has started to rebound. Programmatic spending is now rising for May, as hard hit brands such as retail and travel are slowly returning. Connected TV hasn't been hit as hard as other media during the pandemic, and it looks to be the biggest winner in this recovery. Data from ad tech companies including SpotX, PubMatic, as well as analytic firms such as Pixelate and MediaRater indicate the possibility of a gradual recovery beginning in May. The Trade Desk and OpenX also spoke with Ad Exchanger but declined to share the data. Google declined to comment as well. While ad spending in May is starting to recover, it's certainly not back to pre-COVID levels. For instance, MediaRater notes that May digital ad spend declined 9% year-on-year, which is markedly better than the 34% year-on-year decline experienced in March. And global ad spend on PubMatic is still 16% below pre-COVID levels, said Susan Wu, Director of Marketing Research. Recovery has been gradual but consistent over the past 2 months. Who are the brands that went dark and now turning on the lights? Programmatic ad spend. Brands hit hard by the pandemic are working their way back, rising 14% overall in May after PubMatic. PubMatic also compared to April saw a 20% growth rate in travel spending, 30% auto spending in May. Retail spending on SpotX increased 88% in May to the first week of April, while travel spend grew 32% during this period. Take note that these sectors, travel, cars, retail, are the hardest hit sectors who had to postpone their advertisements during the COVID time. So it's not equal across the brands, but overall spend is increasing for a bit. CTV its platforms X saw 47% increase by education in late May, but this category decreased the spend by 11% during the same period. Now, similarly, sports brands grew 170% on SpotX. Podmatic saw that category decreased spending by 62% during the same period. There's no clear reason for this discrepancy. SpotX mostly sells CTV inventory. Podmatic mostly sells display and online video. Over-the-top advertising has proven to be one of the more resilient formats. Ad spend through the exchange increased 43% since first week of April. OTT and CTV may witness 2 years worth of growth over the next 2 quarters. When you read news such as these, the first three charts that you have to think are number one, the Trade Desk, number two, Con, and number three, Roku. Those are the companies that will make money in this programmatic advert. So the companies we reshare the charts on what's happened to them, whether you don't have it or you do. Are there opportunities to add more or buy, what levels, etc., etc. So the trade desk is really doing well. Actually, in the last quarter, they were saying that the candidates, the political candidacy, have booked a huge bump in their revenues, even before COVID. So their yearly revenues are basically, and with this ongoing recovery in your ad spend, you could see that the trade desk is ahead of the pack, rising from about 140 late March to about 360. So this is more than 100+% all-time highs. For those who don't have the trade desk, you might want to enter somewhere at about 320. Will it fall down? I'm not sure. But for those who have it, good for you. Then again, you've got Rubicon. Rubicon, of course, fell dramatically from about 13 to 4. Now it's really recovering from about 4 back to about 8. We're seeing that these drops of about 7 are opportunities for you to re-enter, as connected TV is a strong demand for Rubicon. So they help sell advertisers. This is more on the selling front. They help advertisers they're helping increase the yield. Both, so they're a middleman for advertisers and content providers. So of course, you've seen that Roku also is making money on over the top advertising. This is a buy. You can see that there's a lot of buying action here from about 100 to 110. 113.80 is still a good entry. Good for Roku, good risk reward. Take note that in your advertising spend, of course, Google and Facebook are going to be the behemoths to look at. Google actually said in their previous quarter that they would have a 50% decline on advertising. With this resumption of connected TV or ad spending, it will, of course, help Google's YouTube and Facebook's Instagram. So that V-shaped recovery is doing well. Google, of course, also participated in the Fang Man going all-time highs about a day ago or 2 days ago. So strong recovery for these names. From about 1,000, it's now 1,465, 46% move for Google from its lows. What else? Connected TV. So yeah. Okay, so since ad spending is rising, you might want to check out that Pinterest, which reported a bad earnings quarter here, could be recovering. So first it rose 12.10 to about 22, fell down to about 16 on bad earnings. But given that the outlook for connected TV and ad spending is rising, it's possible that Pinterest could have a better earnings next few quarters. So any drops for Pinterest around $20 below is probably a higher low, higher recovery. IPO of Pinterest was at 18. So these levels at about 18, 19, 20 are good entries for those looking into a company that's growing their international subscriber base. So Pinterest really right now is still relying majority of their revenues on advertising. That's why the sensitivity to advertising spend. Okay, that's your first news. Sorry, more news to discuss. Second news we want to talk about is Tyson's. Tyson Foods is cooperating with the Department of Justice in a chicken price fixing probe. Tyson Foods said on Wednesday it's cooperating with DOJ under a program that could protect the meat processor from criminal prosecution. Okay, this is the news. You could see that during the Tyson last year was a subpoena in April 2019 about that chicken price fixing. So you can see that the chart of Tyson Foods is at about 5-year lows. It's trading at about $60 to 65. So it fell as low from about 92. It fell as low as 44. There was a lot of symmetrical triangles here from a technical chart standpoint. A lot of buyers at 55 to 60 broke out from that 62 zone. We would say that Tyson Foods is a beneficiary of so many things. The reopening has, also, of course, made meat processing come back again. Tyson Foods had reported a bad earnings because of the shortage in meat. They couldn't process the meat as the factories had to be closed during the COVID time. So now that it's going back and Americans would love to eat their meat instead of plant-based, although Tyson Food has both. Tyson Foods also rooted. So at these levels of about $60, you could see that the risk reward is on your side. Try to enter near lows. Your reward is about 75 to 85. Just so all of the bad news on price fixing, the cooperation would be helpful for Tyson. In yeah, so that news would be a good thing. Any dips should be bought. Next news. Next news is this: Grubhub. Grubhub is merging with Europe's Just Eat Takeaway, creating one of the world's largest online food delivery marketplaces. So earlier on, you probably heard that Uber was interested in Grubhub. But that deal didn't take off. Grubhub eventually partnered with Europe. The all-stock merger deal values Grubhub at $75 a piece for a total equity valuation of $7.3 billion. JustEatTakeaway.com already owns the leading Canadian brand, Skip the Dishes, creating a food delivery powerhouse. Delivery giant right now in the pandemic, food delivery giants have actually been powerful move. In China, you could see that their food delivery all-star is Meituan Dianping. Meituan Dianping initially had an indiscriminate selling from about 110 to about 70, but wow, we saw more than 100+% move from 70 to 60 as food delivery giants were very resilient. You see that the delivery also strong. In general, food delivery giants are getting the love of pretty much profit-proof name so far, ignoring with their earnings and so this just key takeaway. It's listed as well. Let me check. Just eat. Just eat would just eat is saying that they are now with this. They are now the largest line takeaway business. Million Amsterdam, your from a number four. Dark China store alone is worth $300 a share, pointed in Tesla getting close to a game-changing 1 million mile battery. Take note that when Tesla's price was about $240-$250, they had a 1 million mile battery patent, and it's a reason to be excited. He said the shares may hit a 1,500 in a bull case scenario, but investors have to be very careful as these high-flying names tend to get hit hard with fast money, short-oriented money in the marketplace. From a chart perspective, Tesla went all-time move last night. So it fell as low as about 320 during March. That's a remarkable 300% move in just 3 months, right? Yeah, around 3 months. So so far the bullish Tesla fan club, the cults are there. As you could see, this electric wave is very helpful for the entire sector. We're seeing that fuel cell technologies, Ballard Power, 20% last night. There's a 20-year breakout. Also, you've seen Plug, Fcell, Fuel Cell Energy also rising strongly last night. So I think it's a sector play. So Fuel Cell, Plug, most of these are not making money, so be careful once you know that these are still sexy names, have hype, not a lot of fundamental earnings to speak of. You'd see a lot of expensive valuations. Careful on your trails if you have them. Next news. Okay, news is of course airlines cannot keep rallying. A lot of majority brokerage firms are saying a bearish note on all the airlines. The reason is the steady improvement in traveler data will just moderate but fall, and the corporate travel demand will not replace all the pent-up leisure travel demand seen during the summer. The average number of travelers going through the transportation security checkpoints for the weeks ending Sundays have improved. It was up to 361,000, bottoming from about 97,000 during the week ending April 20. However, that number of travelers are down from an 11-week high of 440,000 as of Sunday. So it's moderating to about 338,000 right now. Number two, valuation, of course, is stretched for these airlines. These airlines shot up 70% in a month. JetBlue before pulling back. And then, of course, United Airlines, you've got American Airlines, these companies going 70, 80, 90% a month. It's an insufficient, the recent surge is too soon as we don't have or we have insufficient data to predict whether the recovery is strong across the board. The vaccine is next year. We fear that this move is too soon, too fast. Many airlines also announced that they have treasury help for them, but those could be dilutive to current shareholders. Take note that these loans could be given through shares. Many airlines have received the U.S. Department of Treasury payroll support program as part of the COVID CARE Act. So, COVID Air Relief and Economic Security Act. Lastly, the autumn of discontent is gradually approaching. Airlines would start trimming schedules once the government's payroll support program expires. That move on airlines actually sent all of your recovery names going down. But the nice thing there is that cash that was pent up went to about the FANGs. That's why FANGs went all-time highs. I'll show you the charts on what happened. There was a rotation going on. See, after the big moves of Delta Airlines, of course, after $18 to from 19 to about 36 in just a short span of time, Delta Airlines goes down to 31. You can check whether it's getting support at 28 or 24, whether the rally will fizzle all the way down to 19 or a higher low, given that it still bottomed out. The travel data still bottomed out. Okay, so most of these airlines allowed reopening stocks all to drop. So you've seen resistance for Disney. But then again, as I said, these names have gone 15%. So Disney went up 15% as soon as their Shanghai theme park reopened. It was trading at 105. Now it's trading at 122. So there was that big move on the reopening. Some of the reopening surges could be too soon, too fast. So there's profit taking going on. Uh, Sixth news, marijuana legalization. These are like my last news, so second to the last news. Marijuana legalization campaign in Arkansas gets a boost. U.S. states are continuing to work on marijuana legalization. They're gathering signatures, qualifying for the 2020 ballot. If passed, the proposal will allow the following. Individuals 21 and older will be able to purchase and possess up to 4 ounces of cannabis flower. Individuals could grow 6 plants and 6 seedlings. Each county would have a minimum of 1 dispensary. 30 shops can operate per congressional district. The state will utilize the tax revenue from marijuana sales and after-school programs and operation at the University of Arkansas for medical science. So in this we have been saying that we like Charlotte's Web, CGC. Let's take a look on your news. We are seeing that bullish move on your Charlotte's Web. We took a look at the buying at about $6, shot up to 10. We still added here at about 750, still shooting up at 850. This is a long-term trend as there's legalization for medical cannabis, and also some states are now increasing the recreation cannabis, as all the COVID CARE Act will need some back. They all need revenue, so the legalization of cannabis and marijuana is likely to be passed. Charlotte's Web is in Canada. Canopy Growth, take a look. Canopy Growth had bad earnings this quarter, so there was a fall after hitting from 13 to 22, fell down to 16. Higher low support here. So we're seeing some resistance at 18, but as long as people are willing to assume that the legalization is intact, then you could see higher lows for these cannabis names. Tonight, Hexo is going to report earnings, so I don't know what the earnings would be. In terms of cannabis names, Aurora Cannabis had a good pot sale. So after those earnings, it shot up from 6 to 20. We're still in profit-taking zone at 14, but a lot of people are bullish in the cannabis legalization and the increase in pot sales during the COVID pandemic, such that we're seeing an uptrend channel in your cannabis names. Hexo is reporting earnings tonight. We'll have to check how it's going to move. But before earnings, it went from about 40 cents to $1.20. Last news. This is really my last news. Alibaba. There's an article that's saying that the pandemic is boosting the uptake of cloud services. Take note that Alibaba's Daniel Zhang said that the company's main business in the future will not be e-commerce. According to Alibaba, they plan to expand their cloud capacity, taking full advantage for the fast-growing demand of cloud services. as the demand opportunity for this is more than $266 billion for Alibaba in 2020 and $355 billion in 2022. Alibaba wishes to dominate the cloud market in China. It is very far in trying to catch up with Amazon and Microsoft on the global stage, wherein Microsoft is around 20% market share and Amazon is about 33% market share. Google is about 10% market share. Thank you very much. I'm thankful for all of you guys watching. Please subscribe to Awesome 10X and see you again tomorrow. Bye-bye.